Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
Good morning, Dodge. It's now a few weeks into the US Fed interest rate liftoff, but there seems to be some indication that the US currency continues to dip further. Dodge, do you have any signs of where the US trajectory is heading right now?
Well, good morning, Abraham. It's a fact that we're at the end of the year, and when you look at the trading for this whole year, it was really driven by the anticipation that the Fed was going to raise its best benchmark for the first time since 2006. It finally happened. Actually, when you look at it, the anticipation over the year was so great that the pressure to raise an increase becomes part of the negative reason against not raising rates. In other words, it's a double negative. And so finally, when the Fed raised its rate, the dollar rose first in gratitude for having it finally happen. And then traders and investors both closed out their positions. We're at the end of the year. Who knows what's going to happen next year? The news really was the fact that it was the first raise and not how much of the raise that is going to be anticipated for next year. In reality, we don't expect the increase to be that much, but the fact that we now have the first move and that U.S. economic data now will be much more of a determinant as to how the rates are going to rise and the speed of which. So I suspect that we will not see much of pressure. Traders mostly have closed out their positions now, Abraham. There's 4 days left. There was a good profit to take. They took it. That's a smart thing to do. There's really not much demand or pressure for buying at this point. The move upside for the U.S. dollar will continue next year, but it won't be as much as what was priced in for this year.
Do you think some major currencies like the Japanese yen or the Chinese yuan might come in and take a strengthening position against the US dollar, knowing that the traders will now sell the US dollar because of the capital gains that they can get?
Yes, I do, particularly with China, because you have a lot that's going on. The addition of the yuan to the IMF reserve currency basket, that will increase demand for the yuan. So yes, I do expect that there'll be a shift but as we get into the new year, and particularly when you get to the middle of January and you're no longer, it's hard to look back, but you have to start looking forward to what's happening the rest of the year. Then I think the balance will start to shift back, but not all the way.
Do you think there will be some changes in the bond pricing going forward? Perhaps some of the bond yields might see a rise in interest rate maybe?
Yes, I do. And I suspect that the expected rise in bond yields will be more than the economic factors of the increase in interest rates, because I think that bonds will become more attractive to longer-term investors. But for now, it is hard to anticipate this move. Abraham, you have to let it occur before you take advantage of it, because if you move too soon, you will get dinged and there may be a reversal.
Moving towards the U.S. retail business, it's the holiday seasons. Do you think retail stocks is an attractive place to look at?
Well, not as much anymore, Abraham, because if you take a look, what we're seeing is very specialized. We're not seeing an overall demand for retail, and now that we're getting out of the holiday and we're going to be getting into January, all the sales are occurring now.
Some peripheral services like logistics comes into big play with the retail business. Do you think logistic companies will see some strengthening towards the end of the year?
Yes, I do, absolutely. There are other specialty firms that we're seeing, Zag, which distributes branded coverings. We see Casey, we see W. Wayfair, retail household goods. But the names that we're seeing, Ibrahim, are very specialized. They're not the department stores, the drug stores, the merchandise stores, the home furnishings, the hyper supermarkets. We're not seeing any demand for that. We're seeing a shift into internet buying as opposed to going to the chains themselves and buying physically. So that is going to continue for next year, and the winners are going to be those who can migrate to the new way of delivering services.
Now, we saw big news coming in a few weeks ago. Amazon is now leasing a few jets so that they can start their own delivery services. Do you think this could become a real thing for Amazon? Do you think there will be a cross between just being an online marketeer to now a delivery company outright?
Well, if you talk about pure fundamentals, yes, it's a good move for Amazon, but it's not. It really is a show that they're understanding the way to deliver services, and I don't expect Amazon to migrate away from its key services and its key profitability. But I do see more of a move for the other side of the business, the department stores, to move into Amazon's territory. But Amazon you're going to see Amazon increase in terms of demand for stock, but it also is such a high-growth stock and very much in demand in terms of trading that it's going to be affected not only by the fact that it is a successful retailer, but it's also on a lot of the trading lists and that it will have more volatility.
Now, we know that the Fed had a lift-off because they think that the U.S. economy is improving. Do you think that consumer sentiment is reflective of this particular thought process?
In terms of the seasonality now, yes. In terms of what will happen in January and February, I suspect not. I suspect that we're going to see a pullback. I think that there'll be a transition back into the necessities as opposed to buying gifts that are not as required. I suspect that we're not going to see the demand on the retail side, and I think that the consumer will become more circumspect as we get into January and February until we see what kind of economic performance there is in the U.S. economy, and then decisions will start to be made in March.
Shifting our focus towards Asia, we saw that the markets in China and Japan had some sort of a lift pick up towards the weekend. Do you think that there could be some real causes and effects for this uplift?
There could be. I suspect one of the things that we're watching, or we're going to be watching, is the news last Thursday about the fact that Chinese blue chips were suffered when China's insurance regulator is now forcing insurance funds to disclose their plans to buy up to 5% of listed firms, and then also to identify their sources of funding. I think the negative reaction is very short-term in orientation, but we want to see if there is a follow-through in terms of the regulators and what kind of increase in regulatory compliance that there's going to be as we get into January and February. But I suspect with the addition of the renminbi now in the IMF, I suspect that China's market is now going to be much more open, and there will be a greater demand for outside investors to come into China.
We saw some news saying that the AIIB is going to be up and running early next year. How do you think this will play for the markets?
Yes, early next year, yes, and I think that there's a wait-and-see attitude. I think overall, if you look at very specifics, you will find reasons to be positive. But overall, if you take a look at the world markets, you're seeing question marks that are being asked in terms of demand for individual stocks. And the questions are going to have to be answered. Overall, there could be a nice bullish move, but we're seeing less demand for stocks and more stocks pulling back, including in China as well. And so the markets are going to have to prove themselves first before becoming extremely more bullish for the longer term, at least for next year.
Thank you, Dodge. That was DodgeDorland, Chief Investment Officer of Landor&FuestCapitalManagers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, 1 subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6.